We have a quick question from Sergey who asks if we can provide a quick breakdown of what timeframes we use on our charts to try and plot key support and resistance areas or things like trend lines, etc. So thanks for the question, Sergey. And I've taken a clean chart here of the dollar index as per your question. And I'll quickly show you how I go about finding key technical areas on the chart. So whether it's the dollar or the Aussie yen or the euro pound or WTI, it doesn't really matter. I'll show you a quick list of technical things that I look for in any chart, a type of process, a rundown, a top-down analysis, so to speak. So obviously, as you know, we use the charts on a daily basis. So I'm never really unaware of where we are in a general sense on most of the major asset classes in terms of the chart. So this, isn't a check that I do every single day on every chart. For example, it's just I'll update as the price develops, as the price changes, but mostly speaking, we know where they are. So if it's a chart that I need to mark up from scratch, I'll obviously go through that process with you now. I always like to go up to a very high time frame like the weekly or the monthly and just see where we are in terms of the bigger scheme of things. Are we in any multi-year trends that I need to be aware of? Are we testing any significant all-time highs or all-time lows, any significant swings on these higher time frames? So let's do that. Let's go to the monthly. And now the first thing that I like to do is look for any major support or resistance areas or major trend lines that I can spot on the chart. And I have a very specific rule when it comes to these types of areas that I want to mark up, and that is that I keep them as simple as possible. If I need to go looking for areas of support and resistance and I struggle to find any and I need to make them, squeeze them in, then I'd rather just leave them out. I'm looking for areas that are very obvious on the chart, because that way it should be areas where the majority of chart technicians will see more or less the same thing, if that makes sense. Now, another thing that's important for me to note here is that time is very precious, and we need to be making the most of our time when we do these types of analysis. I want to be spending my time doing research and other in-depth fundamental analysis, and not just looking at the charts the whole day. And that means that I'm not going to be marking out important swing points on these higher time frames that are just light years away from where the price is currently trading at. So I'm not going to be marking out these swings over here and these swings over here, because it's going to take think about it this way. The last time we traded up or down at this level was 2008. Last time up here was 2001. So these types of levels are just way too far away to be marking up on the chart. I really want to be focusing my attention on those areas that are closest to where the current price is. Now, usually I like to start with marking up, like I say, the most significant swings and support and resistance areas on the chart. So looking at this monthly chart on the dollar index, that's essentially just two areas on the monthly, which is clear resistance. We can see here at that 103 level. That's the first one that I'll mark up. And then we also have another resistance at that 100 level. That's psychological levels there. And then we also have this overall area, which is a prior support or prior resistance turn support area. I think that's quite an obvious area as well at that 88 level. Apart from that, there's also this trend line we can mark up, which is stretches from this low going back to 2011 and also that low in 2014. So let's mark that one up. And it's very close to where we're testing right now. So let's just get that as accurate as possible. So I'm happy with that. There's nothing really else. We have this minor area as well where the price is currently testing out. We can see we had that low going back to 1998, a high in 04, a high in 05, a low in 2015, 2016, and now we're testing that area as well. What I don't like about levels like these is that they're quite a big overflow zones. I mean, you can see that big overflow that we had at that area. We also have another big overflow. Come on. There we go. Also have that big overflow over there and a similar story over here as well. So what I don't like about that is that, remember, this is a monthly chart. So that small seemingly looking overflow can be a massive move, on the smaller time frames that we trade on a daily basis. So it's a little bit of a messy area. And whenever it's messy, I prefer to just, leave it out I'll see whether we can, find a clearer level as we go through these smaller time frames. So for now, I'm a bit skeptical of that one. So I'll just leave it out and move on to the next one. Right. So now what we can do is we can drop down to a smaller time frame. Let's go to the weekly. So basically following that top-down analysis. And now the only thing we want to do is where we can, refine some of those levels that we marked out. Let's start with that trend line. Are we still happy? Zooming out. Yeah, still very happy with that level. Currently we'll be testing at as well. Looks like where we are right now, it's a major support area, as we've been flagging out by it's been flagged out by numerous technicians over the last couple of weeks, and one of the reasons that we anticipated some short-term mean reversion bounce in the dollar last week. Not the only reason, of course, but just one of the reasons. So I do want to make that clear as well. Now we can take a look and see if we're happy with the other levels. So taking a look at the support that we have at that 88 level, I would say I'm happy with this overall area that we have over there. Let's look at that resistance. Now, the one thing that's clear from these resistance points at that 100 and 102, we can see that where we are right now, it's also light years away from the chart, from the current price. So I'll just go ahead and remove these two right now. I'm not going to be focusing on them. Now, what we can see straight away, we have this interesting support and resistance structure just below that 95 level. Again, it's an obvious level. We didn't have to go looking for it. It just pops out on the chart. That's an area where we can focus in. And now this area with the lows of 2015 and 2016 is a little bit more interesting. For now, let's just mark them out because we have that low going back in 2015. We have that one in 2017, also 2017, and now more recently. But we also have this low, and we do have confluence there as well with that bottom coming in 2018, as well as that recent price action. So let's leave that one in for now, and we'll see, whether we can refine it a little bit later. The danger with marking up levels where the price is currently trading at, I'm always very cautious of that, because what you can sometimes do is you can try and curve fit levels to fit where the market is trading at right now, or close to. And that's a real danger for technical analysis like this, which is why I would rather leave something out than try and force it to show something that's not really there, if that makes sense. But for now, I'm happy with that as is. We might consider putting in that more recent trend line as well, stretching from 2014 up to 2000 and 18 swing low. But I mean, we had that one marked up. We broke through, retested it, and we quite a while away from that. So for now, I think I'll be happy just to leave that one out. Yeah, so I think that's that. Let's go to the daily. So same process on the daily. Let's just quickly refine the levels. Let's zoom out a bit and see what we can spot. So still happy with that trend line, and we can see nice bounce there in October. Nice bounce there earlier, of course, last week as well. So key trend line that we can have on there. Especially with that more downside bias, we have a break of that retest will be an interesting one to look at. So happy with that trend line. Let's just zoom out and see if we're happy with this support at the 88 as well. Yeah, still happy with that. Nothing too hectic there to change. Let's look at that one now at the 2015 low. We've got a low back in 2017, accurate there as well. We have these tests, numerous tests as well. I think that's a good zone to have on. Let's see if we can change this one. I might bring this one a little bit down because that includes that low going back to 2018. We also have that most recent spike. A little bit less conviction in that level, but we are close to that 92 psychological level. So in that case, I might just round that number down to 92 and have that on the chart. A similar story here with that 92.663. I'll just change that to 92.65, just round it out a bit. And that's really that. Sergio, you can also have, a trend line moving down. I don't like these sharp trend lines though, because they tend to get broken through quite significantly, but there's no real follow through of these types of sharp moves. So I didn't really like the look of that type of trend. And now what you can do with these levels marked up, you can just go down to H4, you can go down to H1, and you can just follow that same process, see if there's any more, recent trend lines that you can draw, recent areas of focus that you can focus on, psychological levels. And that's really the process that I follow. If there's any new chart that I want to mark up, whether it's the dollar or whatever. So I do hope that helps with the question. Sergey, any others, please don't hesitate to let us know.